The American economy is suffering from inflation, which has driven up prices from groceries to gas. Although there aren't many people can do to prevent inflation at the register, Berkshire Hathaway CEOs and renowned investor Warren Buffett thinks there are steps people may take to guard against its impacts. Hello everyone, and welcome back to our channel. In today's video, we'll look at Warren Buffett's advice on how to invest during high inflation. So make sure to stay until the end of the video to learn it all. Number 1. Investors have no power over inflation. Buffett warned investors on April 30 that inflation swindles practically everyone. The cost of products and services is increasing, so what one can buy with $1 now is less than one could a year or two ago. Families in the United States are currently coping with rising costs for food, gas, and housing, to mention a few, on top of decades of income stagnation. Additionally, while market fluctuations in major world events are beyond the power of a single investor, consumers should concentrate on their own personal controllable. As Buffett would say, investing over the long term is often the greatest method to combat inflation. So in most cases, that means sticking with your current investing approach. Number 2. Invest in solid businesses with modest financial requirements. Buffett has long supported holding companies that provide significant returns on the cash put in the company. Businesses with modest capital requirements that can keep their profits should perform better during inflationary periods than those that must invest more money at ever higher prices merely to hold onto their position. Buffett recently compared facing inflation's difficulties to racing up a down escalator. Buffett stated to the Financial Crisis Inquiry Commission in 2010 that a company's pricing power was the single most critical factor in appraising a corporation. You have the ability to raise prices without risking losing customers to a rival, and your firm is doing quite well. A company has a significant advantage during periods of high inflation if it can raise prices because it can balance its own rising costs. Number 3. Index funds can offer straightforward, efficient diversification. Buffett is a huge supporter of index funds, which are investment packages that replicate a specific market index, such as the S&P 500. In May 2022, Buffett stated, "In my opinion, for the majority of individuals, the smartest thing to do is to own the S&P 500 index fund." Low-cost index funds enable you to purchase a diversified portion of a market or industry and often have lower costs than actively managed funds. In real words, it disperses the risk associated with your investments, which is crucial in times of turbulence. The active management of a financial portfolio by purchasing individual stocks or stock picking may be costly, time-consuming, and dangerous. Additionally, according to financial counselor Kevin Cheeks of San Francisco, most professional money managers cannot regularly outperform the market. 70 to 80% of fund managers will underperform the stock market, despite having a few strong years. The evidence shows that nearly 80% of actively managed funds, according to S&P Dow Jones indices, underperformed the S&P Composite 1,500 in 2021. According to Cheeks, investing more money in something that could not do well in the long run won't contribute as much to your portfolio. On April 30th, when questioned about stock selection, Buffett responded, "Charlie Munger, vice chairman of Berkshire Hathaway, and I haven't the foggiest clue what the stock market was going to do when it starts on Monday. Never have we. I don't think one of us has ever suggested or been considering that we should purchase or sell based on what the market is likely to do," he said, or, for that matter, what the future holds for the economy. We are unsure. Select an index, such as the S&P 500, Dow Jones Industrial Average, NASDAQ Composite, or Wilshire 5000, and a fund that tracks that index to get started with index funds. The expense ratio, or annual charge expressed as a percentage of your investment, is a popular criterion by which investors choose index funds. When you're ready to buy, you can do it using a brokerage account or an IRA, 2 types of investing accounts. Access to index funds may also be provided by employer-sponsored retirement plans like 401ks. Number 4. Invest in your own development to excel in what you do. Buffett advised shareholders in 2004 that one of the best ways to keep your purchasing power over time is to invest in your own talent. The top doctor or attorney in a city or town benefits from an education that was paid for with old dollars, but they are able to charge their clients with today's money without having to retrain. Consider adding a new skill to your resume by enrolling in a local institution or using internet resources. Even while earning higher degrees can be pricey, they can expand your knowledge base and make you an invaluable employee in the long run. Your ability to command your fair share of revenues over time will increase as you become more valuable to your firm and its clients. Number 5. Value investing can be a wise course of action. In 1974, Buffett advised Forbes magazine, "Buy into a firm because you want to own it, not because you want the stock to increase." One method for deciding where and when to invest is to evaluate a company's value. Value investing is purchasing high-quality equities, ideally at a discount, and keeping them for an extended period of time. There is also investing in line with your principles, which is taking your social, religious, moral, or environmental beliefs into account while making investments. Buffett has achieved moderate success for himself by utilizing both tactics. For instance, Buffett said that Berkshire Hathaway had bought 15 million shares of the game business, Activision Blizzard, at this year's annual conference. The purchase is one of the most recent instances of Buffett's method, which involves purchasing undervalued shares at a favorable price rather than equities with significant growth potential. Regarding the values of Berkshire Hathaway, Buffett has prioritized 4 key sectors: energy, Apple, BNSF Railway, and insurance. Buffett calls the railroads the #1 artery of American business and a vital asset for America, as well as for Berkshire, in his 2021 letter to shareholders. The foundation of Buffett's investment is his belief in the benefits railroads bring to society and in their positive environmental effects. America's carbon emissions would soar if the numerous important goods BNSF transports were instead transported by truck, he wrote. Choosing investments based on your values can be crucial even if you only have $100 or $1,000 to invest. Cheeks guide clients through a variety of value-based investment decisions. Let's concentrate on what you need to do. Let's then consider how we may accomplish that through a certain lens, such as being impactful or charitable, he says. Number 6. Stay away from conventional bonds. In his 2020 letter to Berkshire's shareholders, Buffett stated that bonds are not the place to be these days. Bond investors could suffer severely in an inflationary climate because interest rates are still relatively low. Buffett has noted that buying a 10-year bond with a yield of 2% is comparable to paying 50 times earnings for a company, with the important exception being that the bond's earnings cannot increase, whether they are pension funds, insurance firms, or retirees. Fixed income investors around the world face a grim future, he added. Number 7. Limit your desires. Charlie Munger, a business associate of Buffett's and vice chairman of Berkshire Hathaway, offers his own suggestions for how to deal with periods of excessive inflation. Munger once said to Berkshire stockholders, "One of the great defenses to being worried about inflation is not having a lot of stupid desires in your life." In other words, you have a significant defense against the vicissitudes of life if you haven't created a lot of false, one to drown in consumer things. Consider using a budgeting tool to track your expenses to assist with this. You'll have a better understanding of how you now spend your money, and you might be able to spot dangerous spending spurts before they develop into a habit. Buffett has avoided gold, a commodity frequently seen as a fantastic inflation hedge. Gold supporters are particularly concerned about how inflation would affect paper money, and Buffett shares this worry. But if you own 1 ounce of gold all the time, you will still own 1 ounce at the end of it, he said in 2011. Instead, he favors owning valuable assets that produce dividends, income, and food for their owners, such as stocks, real estate, or farms. Cryptocurrencies have recently been touted as the digital equivalent of gold, but Buffett is also very dubious of them. It's still difficult to predict whether the current inflation rise will persist or if it will begin to decline. If you're worried about growing inflation, you might heed Warren Buffett's advice and invest in productive assets, like high-quality companies, with modest capital requirements, rather than low-yielding bonds whose payouts don't align with inflation. With that, we've come to an end. Let us know your thoughts in the comment section below. Don't forget to give this video a thumbs up if you enjoyed it and subscribe to the channel if you haven't already. See you next time.